Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, September the 12th. The year's 2022. Let's talk trading. Trading is all about you, part 8. These videos are for educational purposes only. Your results may differ from mine. As always, make sure you have your risk management in place. Never lose more on any one single trade than you're willing to lose. And just remember, this is very simple. Position size equals your risk divided by the stop loss, or stop loss equals your risk divided by the position size. So you pick 2 and you calculate the third. Quick look at the monthly chart. We have turned green for the month. We are knocking on the door at 117. In fact, we broke it once, hit a high of 1703. For the week, we still have not filled that gap. And remember last night I talked about a breakaway gap. Well, it looks like price broke away. It came down to the 1600, and as you can see, it's moved 100 pips off of that low. We also popped back in that opening range, and we have shot right back out of it. We also broke the Friday high. For the year, we're 1,829 pips below the yearly open. Probably should put that back. Okay. You can see on the monthly chart, on the weekly chart, what we're looking at in terms of the year. Inside bar action. We're not going to have an inside bar today. There are some pairs that are trading. We're giving you the inside bar trade on the daily, weekly, or monthly. Range, we're at 103 pips at the moment, 5 pips off the high. So, rat traders, get ready. And we've got more pairs over 100 than not, with the euro yen leading the way at 225 pips. Buy zone traders, you can see right here we had a buy trigger. It was in the launch pad area in the 1640s, and you can see price shot right up through it. I don't know what it is about that 40. Doesn't matter if it's 1640 or 2640. But it's just something when price hits the 40s on the pound, it just likes to rocket out of that area, especially if it comes up to it. And you can see here we are in the rat zone. So, red rats, get ready to feast. We've hit the weekly R1. Bambino Flicks indicated a long, but we were never near the pivot. We hit R1, and trading plan would have called a short, but no, price kept going. Pivots. We've missed the daily pivot. We've missed the weekly pivot so far this week, and we're still approaching the monthly pivot, which is over 140 pips away. Wick zone traders, very simple. You had one opportunity here, and price shot out of that upper wick zone. Highest low, lowest high traders. There was a trigger just here just a couple minutes ago. Would have been a nice trade. Or scalping off of, or scraping like I like to say, off of those previous highs at 198. And I had a question about the holo trade, the highest open, lowest open. You can see right here, we're in the middle of one with that open being 116.91. So we've got about 3 pips. Also, this was a 1, 2, 3 trade. We hit a high here, tested that high, price came back down, short at the open. Once again, good for a couple of pips. Now, as I've mentioned before, you can take these trades and grab a couple of pips real quick, or if you want, if you have the patience, you can wait them out and do range plays. And what I mean by that is see if price will hit its range, or 50% of the range, or 125% of the range, and try and take your pips that way. And if you're wondering what this screen's all about, I don't think I've shown it. Much. But here's the indicators. As you can see, there's some of the older donational indicators. But they said they wanted to improve their holo trading. The funny thing is it's not the holo trading that you're going to be improving. It's you're going to be improving. So for example, here we're now above the highest open. So if you didn't take those 2 or 3 pips when the market gave you that opportunity, that's on you. It's not the method. It's you, the trader. So we could come down to, say, M5, which is going to take a while to load up here. But, you know, here's the picture you're looking at. So right now, there's another holo trade, and you saw how fast price jumped through there. So if you remember, you're looking to trade or enter a trade in this zone, not necessarily at the line, but just like the rat trade, you don't want to wait for it to get 15, 20 pips off the high. That's, you know, your last ditch. So you're looking for an entry here. So you had a green candle, a red candle. So usually you can take the break of that red candle, which was way below the open, the highest open here. So maybe just jumping in right here at the open of this candle, saying, okay, we had a, if you look here, we had a flip, a flop, a flip, a flop, a flip, a flop, a flip. How many times is it going to do that before we get 2 in a row? So we had 1, 2, 3, 4, 5, 6 flip flops in a row. So right now, if you would have taken that trade, you're up about 8, 9 pips. And you can see here, this was an area that prices pushed away from. So you can take a chance, take that break or take a reversal. So one thing I noticed right here, we had a big candle, 12 pips on the M5. Anything over 8 on M5 is something I call a big candle or return bar. Price needs to return to that open, and it just did. So you could take your money off the table. We have a nice, possibly 11 pips on that trade. So what do you improve about you? Well, what you can improve is your patience to wait for a signal. And like I said, if it broke it hard. There's more pips, 16 pips on that trade if you're still in it. Sometimes you want to wait for the candle to close, and sometimes you don't. And that's just how that works. And the main thing is not to get upset if you had punched out here and left 5 or 10 pips on the table. There's no reason to be upset, because what will happen is the next time you try and get more pips, you can see what happens. And remember, trading isn't about one single trade. It's about the accumulation of trades. Think of it almost like baseball. Walmart likes to talk about baseball, and he's a little under the weather today, so that's why he's not on the video. But think about, let's just say you've got 9 innings, in your baseball game. So let's just say you got 9 innings in your trading game. So you're going to take 9 trades. Maybe you'll win some, maybe you'll lose some. But at the end of the game, did you score more than the other side? Did you take more pips from them than they took from you? Meaning, if you think about it, that's kind of the way it is. You say, okay, this inning, this trade, I took 3 pips. Next inning, they took, 2 pips back. Next inning, right now, I took 15 pips. And if you think about it that way, maybe you'll be more likely to take a look at the trade and say, you know what, it got down to here, but when it started crawling back up, it didn't break this low. And then when it came back into this candle body, you just go ahead and take your 2 or 3 pips and be happy and see what happens next. And as I mentioned right here, it was going to come back to this return bar, which it did, and that would have been the place I would have probably exited and would have left about 9 pips on that table right there. But then again, if I change time frames, I might have seen another return bar somewhere else. It looks like pretty much the same one, but this is a return bar here. And usually on return bars, there's not much wicks. So this is a huge bar, but I wouldn't necessarily consider that a turn bar. If anything, I would consider that a kink. And I don't know if I discussed kinks yet. I think that's something, but basically when you see these 2 candles, same color, but you see this move here, it's kind of like if you think about it, like a chain. So that's kind of like, see how things got kind of kinked up here for a while, and then a little bit here. So I hope that helps the holo trader out there that was asking about it. So the main thing is if you wait and enter here and it reverses on you, that's just the luck of the draw. But if you do this repeatedly and you have your trading plan, meaning your money management, your risk management in place, it should pay off. And I notice prices at the psychological 1675 area. Let's see if it runs back, because right now we've got a huge return bar and it might take it a while to get back there. So fellow traders, I hope some of that helped, because remember, if you want to improve your trading, you really have to improve you, because it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you haven't hit the subscribe button, please do, and hit the like button. Move me up in that YouTube algorithm, even though I think it's going to take, I guess I need 1 viral video to make it happen. This is TheRumpledOne, over and out.